So this morning, firstly, we are going to look at taxation of digital economy. After that, we also look at tax return. From tax return, we look at education tax. So that is what we are looking at this morning. Taxation of digital economy. What is digital economy? Like we said, digital economy is a worldwide network of economic activities and commercial transaction, professional interactions that are enabled by ICT. What this means is that digital economy means a business activities, a commercial transaction, or professional interaction that are driven by the use of ICT. That means by the use of information technology. When you carry out a business online, you sell your good online, you are into digital economy. When you are a professional, you are rendering service online. Take for instance now, as I'm doing lecture via Zoom now, so it's digital economy because I cannot do this lecture without IT, without internet, without computers, without phone. So any economic activities, commercial transactions, professional interaction that are driven by the use of internet information and communication technology, it is called digital economy. It is called digital economy. So these are the digital economy. A business model that makes use of ICT. They are digital economy. Now, what are the different business model under this digital economy? What are the different business model that we have under the digital economy? What are the different business model that we have under digital economy? What are the different business model that we have under digital economy? One of the business model that we have under digital economy is called e-commerce, electronic commerce. Some people, they are normally buy and sell using IT, using Facebook, using LinkedIn, using Instagram, using Twitter. They sell their good from all those social media devices. It's digital economy, e-commerce. As I'm sitting down in my house now, I may think that I want to eat a food from Lagos Island, from Victoria Island. I love a restaurant that I normally eat from Victoria Island. I love their food. If they're open today, I don't need to go there. Just search online from my phone, order the food online. They will take it to my house. I will pay. Once I'm ready to pay, there is no problem. That is digital economy. As I'm sitting down here, I can order a good from Maduguri. They will deliver the good to me. That is digital economy. I don't need to stress myself saying, let me go to Maduguri, let me go and buy. I will order it online. That is the work of IT. Electronic commerce is one of the different business model under digital economy. Another one is online advertising. Online what? Advertising. When you are advertising your product online, some people, they advertise their product through Facebook. They advertise their product through Instagram, through LinkedIn, through Twitter. different way that you can advertise your products. So online advertising. Facebook helps some people to advertise their products. LinkedIn help people to advertise. Twitter help. Instagram help. So many like that. They help people to advertise their product. It's one of the business model under digital economy. Another business model under digital economy is cloud computing. Cloud what? Computing. If I want to save my information, I'm fair. Hello, can you hear me now?
Yes, we can,
Hello,
sir.
can you hear me? Yes, we are talking about different business model under digital economy. What are the different business model under digital economy? One of the different business model that we have under digital economy is electronic commerce. We have another one called application store. Another different business model that we have under digital economy is online advertising. Apart from that, we also have cloud computing. Apart from that, we have network participating platform, online marketing platform too. This online marketing platform is most common. There are some marketing companies that help to market a product of another company. So once you pay the company, they will help you to market your product online under different platforms. So they will help you to market your product. We have online payment service. Online payment service. We have internet banking. They are part of online payment service. All these OPay, PalmPay, Money Point, they are part of online payment service. So these are the different business models that we have under digital economy. So why are we looking at digital economy under the task? What we want to know is all these people doing business online, how do we ensure that they are in the task net? How do we ensure that when once they earn income online, they pay tax on that income or profit? How do we ensure that they are not evading tax? Most of these people doing this online business, this online, operating online, some of them may not be physically present in Nigeria. Some of them may have office outside Nigeria, and they are earning profit, income in Nigeria environment. Such kind of company, how do we ensure that they pay tax? How do we ensure that we tax them appropriately? So that is what taxation of digital economy is talking about. We have different business model under digital economy. So which I've mentioned: e-commerce, application store, online advertising, cloud computing, online marketing platform, network participating platform, online payment service. All these different business models, how do we ensure that they are paying tax anytime they earn income via online? So the next area we look at, what are the tax challenges? Tax challenges of digital economy in Nigeria. What are the challenges that tax authority face if they want to tax all these people doing business using IT online? If they want to tax them, what are the challenges that the tax authority face? One of the tax challenges of digital economy in Nigeria is companies make significant profit from remote online transaction without physical presence in such countries. This is one of the tax challenges. Most of the companies that make profits online, most of them are not physically present in Nigeria. They are not located in Nigeria. They don't have office in Nigeria. We don't have any place that we can trace them to in Nigeria. And they are making profit in Nigeria. We don't have any office that we can go and serve them later, that we can go and close if they don't pay tax. The office is outside Nigeria, but they render service to Nigeria people using online. They sell goods to Nigeria environment online. So this is one of the tax challenges of digital economy. Another tax challenges of digital economy is difficulty in attributing value to user-generated data and user participation in a market economy. Most of the transactions going on online, it is very difficult for tax authority to attribute value to them. That this transaction you are doing, this is the value of the transaction. This is the kind of transaction, this is the amount, this is the kind of tax you are going to pay. Because most of the people doing business online, we don't know them. Even if you know them, it will be very difficult to be asking them, this phone that you buy online, how much? I'm a tax authority. I want to ensure that the person that sends phone to you pay tax. This rich watch that you buy online, how much is it? How do we attribute? One of the challenges we face is difficulty in attributing value to most of the data that was generated online through the online business. So this is one of the task challenges of digital economy. Another task challenges of digital economy is lack of clear roadmap on the real-time tracking of digital transaction, especially business to consumer transaction. This is one of the tax challenges. FRS, tax authority, there is no roadmap. As at present, there is no roadmap on how we can track all those online transactions on a real-time basis. As people are doing transaction online, we should be able to track them. We should be able to ensure that they pay tax once they finish the transaction immediately. As they are doing the transaction, we should be able to ensure that the value-added tax is deducted and is remitted to the tax authority. Tax authority have not designed roadmap on how they will track real-time, how they will do real-time tracking of digital transaction, most especially business to consumer transactions. Most of the people doing online is mostly business to consumer. People buying good to consume, to use. People rendering service to direct users. It's not that if I want to buy good, I want to resell, I will buy through online. No. Most of the people buying good online, they want to use it direct. It is business to consumer transactions. Another tax challenges of digital economy is lack of effective tax collection mechanism for VAT business to consumer transaction and for services and intangibles. There is no mechanism in place that tax authority will use to collect tax for all these VAT business transaction, to collect VAT for the business consumer transaction that is carried out online. Why another challenges of taxation of digital economy, tax challenges of digital economy is easy relocation function. Easy relocation function. One of the major tax challenges of digital economy is easy relocation function. Most of these people doing business online that are not in Nigeria, if Nigeria government is now saying they will start collecting tax from them, they can relocate to another country. What they will do is they will not render service to Nigeria people. They will not sell goods to Nigeria citizens. They will be selling their goods to other countries. Easy relocation function. So if you say, you want to, you will need to pay tax for every income you earn in Nigeria, even if you are not in Nigeria, and because you are selling goods to Nigeria people, you are rendering service to Nigeria people. The worst that these people can do, they can relocate to another country. They will not be rendering service to Nigeria people again. They will not be selling goods to Nigeria people again. So, easy relocation function. All these are the tax challenges of digital economy. All these are the tax challenges of digital economy. What are the policy options for addressing these tax challenges of digital economy? All these challenges you mentioned, what are the policy that we can use to address it? One of the policy that FRS have done to address these tax challenges of digital economy, one of the policy is significant economic presence. Significant what? Economic presence. What does that mean? Most of these people doing business online, there must be presence in Nigeria. They must have significant economic presence in Nigeria. That means they must have person representing them in Nigeria. They must have where we can trace them to in Nigeria. That is physical presence. But significant economic presence means under the Finance Act 2020, SCP means even if you are not located in Nigeria, if you don't have office in Nigeria, so far as you are doing business in Nigeria, you have interest in Nigeria, you have presence in Nigeria. So significant economic presence does not mean physical presence alone. You can be present in Nigeria online. So significant economic presence is now giving tax authority a right to tax anybody doing business online, even if they don't have office in Nigeria. Another policy option that they have done that they can do, the tax authority can use to address these tax challenges of digital economy is withholding tax for certain digital transactions. Some of the digital transactions that they do online, we can deduct withholding tax on them anytime that transaction is carried out. And that withholding tax can be a final tax, most especially all those cross-border transactions. That means transaction where the buyer is in Nigeria and the seller is in other countries, is outside the Nigeria environment. That is cross-border transaction. if it is cross-border transaction, we should introduce withholding tax. And the withholding tax we should introduce should be a final tax. This is one of the policy options for digital economy. Another policy option for digital economy, we should make use of equalization levy. Equalization levy. Equalization levy means the tax treatment of foreign and domestic supplier by imposing a levy on the gross value of sales of goods and services. What this one means is that equalization levy, the tax, those who are present in Nigeria, those who are not doing business online, that they are selling their goods physically, they are not selling goods online, what kind of tax that they are paying? If you know the kind of tax that they are paying, that is the tax that those who are doing business should be paying too. We should treat those who are doing business online, foreign company, we should treat them equal with domestic suppliers. We should ensure that the levy, the tax we impose on those who are foreigner, foreign company, non-resident company, should be the same with the one of we should be the same with the company that are resident in Nigeria are paying. That is equalization levy. Another policy option that we can use, FRS can introduce another type of tax called digital service tax. One of the policy options that we can use to address tax challenges of digital economy is introduction of digital service tax, DST. This one means that if you are doing business online, you may not pay company income tax, you may not pay education tax. Tax authority should introduce another type of tax called digital service tax. This digital service tax is specifically designed for those who are doing business using digital transaction, using digital platform. So these are the policy options that we can use to address tax challenges of digital economy. These are the policy options that we can use to address tax challenges of digital economy. One of them is significant economy presence. Number two, withholding tax for certain digital transactions. Number three, equalization levy. While number four, digital service tax. These are the policy options that we can use to address tax challenges of digital economy. Another area we are going, how do we tackle those challenges associated with taxing digital economy? How do we tackle? This one is different from policy option. Those challenges, if you don't want them to occur at all, how do we tackle them? Number one is to review the scope of fees base under Section 30 of CETA, Section 30 of Company Income Tax. We need to review the scope of fees base. Section 30 of Company Income Tax defines fees base as a place where you have office, branch, factory. Do you understand? You have agents. So we should review the scope of it. Fees base should also include digital economy. that even if you are not present in Nigeria, you don't have office in Nigeria, you don't have branch in Nigeria, you don't have a factory in Nigeria, so far as you are doing business online and you sell it to Nigeria people, indirectly, you have a fee base in Nigeria. So one of the ways we can tackle tax challenges of digital economy is to review the scope of fees base under Section 30 of company income tax. Another one, we should have another way we can tackle tax challenges of digital economy is adoption of creative approach to innovative tax legislation. The tax authority should adopt creative approach to tackle this digital economy transaction, to tackle these tax challenges of digital economy. They should make use of creative approach so that during the tax legislation, those tax legislation that they do, some of them should be specifically related to digital economy. Some of them should talk about cross-border digital transaction. You understand? There should be a particular section under the company income tax that will talk about cross-border digital transaction. Another one, automated tax administration. FRS should adopt automated tax administration system like Tax Promas, Rev 360, and so on like that. So that once they adopt that, like e-invoicing is applicable to large company and medium company. As they are selling good to people, the VAT due on that good is remitted to FRS direct. They don't need to say they want to pay VAT. So that is e-invoicing. Do you understand? E-invoicing is an automated tax administration system. Tax Promas too is an automated tax administration system. We have Rev 360 too. They are all automated tax administration system. So automated tax administration system, we also address tax challenges. We also tackle the tax challenges of digital economy. Another one is data handling. The way we handle our data, FRS, tax authority, they should ensure that they should handle the data of the taxpayer very well. From the data of the taxpayer, from their bank statement, they can generate a lot of data that they can use to trace some of this online business, some of this online transaction. From the data in the Facebook, from the data in the Instagram, if they handle it very well, that data can give them results, positive results, for them to trace all these online business transactions. So data handling will also tackle tax challenges of digital economy. Strategic partner with digital economy service provider. Strategic partner with digital economy. FRS cannot collect tax from this digital transaction without partnership with who? Digital economy service provider. Who are the service provider under digital economy? They are the Facebook. the admin of the Facebook, the Twitter, the Instagram. They are the service provider. They are the one providing the service. FRS need to partner with them by ensuring that they should be the one to be giving FRS information about the digital transaction that was carried out on their platform on a daily basis, so that FRS can use it to trace those who have done that digital transaction and ensure that they pay tax. Even FRS can partner with them that before you do any transaction online, before you pay any online something, the appropriate tax should be deducted. They can help FRS to be deducting the tax. So they need to partner. So strategic partner. We have another one, capacity development. FRS, they need to train their staff on how they can deal with online digital transaction, on how they can review online digital transaction. Their staff have to be IT inclined. They need to have more knowledge on IT. They need to look at how they can use data to generate value, to generate results. They need to know how to analyze data. So FRS need to train their staff. They have to be a capacity development before they can say they want to tackle the task challenges of digital economy. So these are the way in which we can tackle the task challenges of digital economy. So this is what we need to know on digital economy. So the other area on this digital economy is not part of our syllabus. So we don't need to stress ourselves on the other area. What we need to know on digital economy, what are the different business models under digital economy, which I've mentioned: electronic commerce, application store, online advertising, cloud computing, online market platform, network participative platform, online payment service. Another thing we need to know, task challenges of digital economy in Nigeria. We need to know that. We need to know what are the policy options that we can use to address that task challenges. Why the last thing that we need to know, how do we tackle the challenges associated with taxing digital economy? That is what we need to know for our level. Any other thing under this topic, like significant economic presence and so on like that, it is under the advanced tax. So we don't need to know that. So that is what we need to know under digital economy. So do we have any question? So in the absence of no question, we can now look at education tax, tertiary education tax, tertiary education tax. We can now look at tertiary education tax. Okay, tertiary education tax in Nigeria. What is education tax? Education tax is a tax imposed by who? By Tertiary Education Trust Fund on the accessible profit of all companies registered in Nigeria. Education tax, like I said, it is a tax imposed. It's a tax imposed by Tertiary Education Trust Fund. It is imposed by Tertiary Education Trust Fund on the accessible profits of all companies registered in Nigeria. That is tertiary education tax. Every company, either PLC or limited, they pay tertiary education tax. The only exemption to tertiary education tax is a company that their turnover is less than what? The company that will not pay
25 million.
tertiary education tax, any company that their turnover is less than 25 million
5
in that
million.
year of assessment, they will not pay tertiary education tax. This tertiary education tax is formally called education tax. Education tax is different from tertiary education tax. Before, it was formally called tertiary education tax, ET. When it was called education tax, the tax, when they collect it from company, third fund will use it to develop primary, secondary, and tertiary institution owned by government in Nigeria. Any public primary, public secondary school, public tertiary institution owned by government, either federal government or state government, they will use it. But in 2001, they now call it tertiary education tax, meaning that as from 2001, when they collect this tax, they will not use it for development in primary school again. They will not use it to construct any project in secondary school again. It is basically used to develop tertiary institution, public university, public polytechnic, public college of education. Those are the people that have that benefit from this TET. That is the reason why we call it TET. It was formerly called education tax, but it is 2001 and 2001 that they changed it to TET, tertiary education tax. No, 2011, not 2001, 2011. That is when it was changed to tertiary education tax. Presently, what is the rate of tertiary education tax? 3%. 3% of accessible profit of a registered company in Nigeria. Other than what? Other than small company. What that means is small company will not pay tertiary education tax. Now, what are the objectives of this tertiary education tax? Why do we collect tertiary education tax? What are the objectives? One of the objectives of this tertiary education tax is to use it for physical infrastructure for teaching and learning. They use it to develop physical infrastructure in tertiary institution for the purpose of teaching and learning. So that is one of the objectives of this tertiary education tax. They use it to develop physical infrastructure like lecture theater, like lab center, like libraries, library or in public. It is used for public institution or public tertiary institution. Private university cannot benefit from third fund. How this third fund work? FRS will collect the third fund. Once FRS collect it, they will remit it to which body? FRS will collect the tertiary education tax. They will now remit it to which body? They will remit it to a body called Tertiary Education Trust Fund, third fund. It is this third fund that will now be the one to spend the tax. They can use it to construct building, lecture hall, lecture room in public institution. They can use it to construct library. They can use it to construct lab in any public institution. They can also use it to construct a hostel. Another objective is is to provide maintenance, provision of maintenance of instructional material and equipment. They can use it to provide instructional material and equipment. They can use it to do to purchase some computer, some laptop in the ICC center in the university. They can use it to procure CCTV material, CCTV equipment for security. They also use test funds. Another objective is to support research and publication. Test fund, they can use it to sponsor some of the lecturers to outside the country to go and do PhD, to go and do research. They can use it to support lecturer. If a lecturer wants to do inaugural lecture or they want to publish a book, they can use it to assist them. So research and publication is part of objective of TED Fund. Academic staff and training, academic staff training and development. TED Fund, they can use it to train lecturer. They can use it to develop them, to organize training for them, develop. So this is part of objective of TED Fund. So all these are the objective of TED Fund. Now, the next area we need to look at, TED Fund intervention. If a university want to apply for TED Fund, they want TED Fund to help them, or they want TED Fund to give them money. What are the areas that they can apply for TED Fund as a university or polytechnic or college of education? What are the area of intervention where TED Fund can intervene in public institution? One of the area is Center of Excellence. They want that university to become a center of excellence. They can help them to support them. Another area, in the area of zonal intervention, there are some zones, there are less education area. Most of the northeast, northwest, there are less education area. They can TED Fund can intervene so that they can help them to address the issue of less education in those areas. National Research Fund. TED Fund set up a national research fund where lecturers that need money for research can apply. Higher education book development. TED Fund helps some lecturer to publish book in the university, in the polytechnic, in the college of education. Postdoctoral fellowship. After your PhD, if you want to do postdoctoral fellowship, TED Fund can assist. Academic manuscript development. TED Fund assists some lecturer to develop their manuscript, the academic manuscript, academic write-up. Library development. They help to develop library. Conference attendance. Maybe some lecturer want to attend a conference outside Nigeria. TED Fund can support them to attend the conference. Another one is teaching practice. This one applies to students. All those students in the College of Education, if they want to went for teaching practice, the allowance that will be given to them, TED Fund will give them some allowance for such teaching practice, because the teaching practice can take like 6 months. So those are the areas covered under the TED Fund. Now, what are the basis of computation? We have said TED Fund is 3% presently of accessible profit of all registered companies in Nigeria, other than small companies. So and imposition of third fund. Section 1 of the Third Fund Act 2011 said third fund should be imposed. Tertiary education tax should be imposed on company. This company, they use it to support education in Nigeria. They use it to do give back. Most of the employees of the company, they are produced by the public institution. So one of the ways that company can appreciate government is by paying tertiary education tax. And this tertiary education tax is paid by company, either manufacturing company, service company, including petroleum company. So apart from collecting company income tax, petroleum profit tax, every company also paid tertiary education tax. So now, when the next thing we need to know, collection of tertiary education tax. When FRS collect tertiary education tax, FRS need to give account of the third fund that they collect, tertiary education tax that they collect. They need to give the account to an agency that manage the tertiary education tax, the TET. The agency is called third fund. Why FRS is giving the report? The following are the content of the return that will be made by FRS while rendering return on tertiary education tax to the third fund. They have to provide the name of the company that make, all the name of the company that make the third fund, the TET, the tertiary education tax, all the name, FRS have to provide it to third fund. The amount that they collect, the amount paid by each of the companies, the amount of TET paid, they need to provide that. The accessible profit for that accounting period, they need to provide that too. Any other information that third fund require, they need to provide that. What are the other information third fund will require? The cost of administration and management of the fund. When FRS collect 100 million from TET, they will not remit all the 100 million to third fund. No. FRS too will collect their own percentage. They can collect maybe 5% of the amount collected or 10%. It is the balance that they will remit. That is the cost of administration and management of the fund. The maintenance of any property acquired is part of other information. Now, what are the exceptions to third fund? Like we said, a small company that their turnover, their gross turnover is less than 25 million. They are exempted from third fund, as stated by Finance Act 2020. The Finance Act 2020 said a small company, their turnover is less than 25 million. They are exempted from third fund. We have board of trustee that manage the affair of third fund. We have board of trustee that manage the affair of tertiary education tax fund, third fund. That agency, they have a board of trustee, and the board of trustee consists of chairman. The chairman shall be a person that have a good knowledge in finance and administration matter, and he shall have a qualification and experience under the function. Apart from the chairman, under the board of trustee, we have 6 persons representing each geopolitical zone. Is part of the member of board of trustee. We also have representative of Federal Ministry of Education, representative of Federal Ministry of Finance as part of Board of Trustee. As part of Board of Trustee, we have representative of university from the university, representative from the polytechnics, and representative from College of Education too. They are part of Board of Trustees. What is the function of this Board of Trustees under TED Fund? What are their functions? What are the functions of Board of Trustees of TED Fund? One of the functions of Board of Trustees of TED Fund is to monitor and ensure collection of TED Fund by FRS and ensure that TED Fund, once FRS collect it, they transfer the fund to the TED Fund body. Another function of Board of Trustees is to manage and disburse the tax imposed by the Act. It is the Board of Trustees that would say, this is how we are going to spend the money. This is what we need to do. This is the building we want to construct in this university. Another one, to receive the request and approval of admittable projects after due consideration. To receive requests and approve admittable projects after due consideration. If a university wants TED Fund to come and help them to construct a building, a lecture theater or a lecture room, they will send a request to TED Fund, and that request, they will send it to the Board of Trustees. The Board of Trustees will receive the request and they will approve the project after due consideration. The Board of Trustees, one of their functions is also to monitor and evaluate execution of the projects. It's part of the function of Board of Trustees under TED Fund to monitor and evaluate execution of the projects. Another function of Board of Trustees is to invest funds in appropriate and safe security. To invest funds in appropriate and safe securities. It's part of function of Board of Trustees. Another function of Board of Trustees is to review progress, suggestion improvement within the provision of the Act. To review progress, suggestion improvements within the provision of the Act. These are the function of Board of Trustees. Now, how do we distribute this TET, tertiary education tax? This tertiary education tax is shared among university, polytechnic, and college of education. 50% of the amount collected from tertiary education tax is given to university. 25% is given to who? Polytechnics. While the balance of the 25% is given to who? College of Education. That means every year, if they collect 200 billion for TED Fund, indirectly, 100 billion will be given to university. 50 billion will be given to polytechnics. Why another 50 billion will be given to polytechnics, College of Education. This is how they share. They share it in the ratio 2:1:1. Ratio 2:1:1. That is how TED Fund is shared. What are the offenses and penalties under third fund? If a company did not pay third fund to the FRS within 60 days, when the third fund is due, third fund is due 6 months after the end of the year. If a company failed to pay within 60 days after 6 months, that company will pay the third fund, and they will also pay 5% penalties. Failure to pay third fund will attract 5% of the amount of tax not paid. Apart from that, the director of the company can be fined, or if anybody fined guilty of mismanaging tertiary education tax, that person will pay a penalty of 1 million plus or imprisonment of 6 months or both. If anybody finds guilty of not paying third fund or mismanagement of third fund or giving wrong information, misleading information relating to tertiary education tax, that person, if it is a director or principal officer of the company, will be liable to a penalty of 1 million or imprisonment of 6 months or both. These are all what we need to know under third fund. These are all what we need to know under third fund. So this is what we need to know on tertiary education tax. So what is your question?
Yeah, thank you, sir. My question is, I have a question and I also have a clarity to make. My question is, can third fund grant student loan? That is my question. Then for clarity, I remember in class we were solving a question and you did mention that TET is 3%, but for account from 2024 to date. Then for the account 2022 and 2023, you said it was 2.5 and 2% for 2021 and prior years. I don't know if that still stands.
Okay, coming to your question. Student loan is not from third fund, though. Student loan is not coming from third fund. There is an agency called NEF Fund. They are the one that manage student loan. And there is a way that they generate revenue. So it's not from third fund that they generate revenue. Do you understand? So there is an agency that manages student loan. It's called Nigeria Education Trust Fund. So we call them Net Fund. Concerning your question, I said presently the rate of tertiary education tax is what?
3%.
3%. That means I'm not saying all the year. When you have 2022, 2022 and 2023 and 2024 year of assessment, education tax rate is 2.5%. It was 2025 year of assessment that education tax rate start from 3%. 2022 downward. Education tax rate is 2%, which I've discussed this in different time. If you look at your introduction to tax, when we are talking of education tax, I state the rate for the relevant year. 3% started from 2025 year of assessment. So up to present, we are using 3%. Any other question?
Thank you.
So that is what we need to know on this education tax. The next area we are going now is tax return. Tax return. Okay, Adejare, what is your question?
So I have a follow-up question to the one Alhaji asked. If we are faced with an examination, and then the YOA for the examination is 2023 or 2024, is it appropriate to use 2.5%, or we should just
Yes,
take
it's
it as
appropriate.
given?
At the back of your
Okay.
exam question, anytime you want to solve, you are in exam, you want to do task, open the back of your words. Exam question. They will tell you the rate you should use for each of the year for education tax. They will tell you the rate you are going to use for company income tax. They will even tell you the rate you are going to use for personal income tax at the back of your question. If you go and check past question, you will see the rate at the back of the question. They will tell you, if you look at the question, they will tell you from so year is 2%, from so year is 3%, from so year is 2.5%. So please check the back of your question. Anytime you want to solve, you want to write tasks, there is a lot of guidelines in the back of your question that will guide you in solving question. Before you start solving question, check the back of your question. They will give you some rates in the back of your question. That rate is the one that will guide you. Do you understand?
Yes, sir.
Yes. So any other question? So in the absence of no question, what we have left now is tax return. And we look at one question on double taxation relief. But I have to go for break. So maybe we can resume we are still using this platform. So we are going to resume by 10:40. So let's have a break. So when
Mr.
we
Idris,
resume, yes,
please, can you resend this education tax material?
I will do that. So when we resume,
Mhm.
we look at tax return. Tax return. We look at tax return. After we finish tax return, we can now do a question on double taxation relief. So once we do that, we can close for today. So
All right, sir.
we are going to resume back by 10:40.
Mr. Idris, if you're speaking, you're muted.
Okay. Hello, can you hear me?
Yes, we can hear you now.
Okay. So we are back. So tax return. Let's first look at tax return. What do we understand by tax return? Filing of tax return for various taxes with tax authority is a legal obligation which must be fulfilled by every taxpayer. Must be fulfilled by every taxpayer. So what is tax return? Tax return is a form which a person or organization presents an account of his income and circumstances used by the tax authority to determine liabilities. What tax return means? It means a report prepared by a taxpayer containing information on a tax affair for a given period for the purpose of complying with tax law, for the purpose of complying with the tax law. So tax return simply means a report prepared by a taxpayer containing information on the tax affair for a given period for the purpose of complying with the tax law. The information that taxpayer give to the tax authority, the tax authority will use it to assess the taxpayer to tax. The tax authority will use it to determine the amount of tax liability that the taxpayer will pay. That is tax return. This tax return can be end of the year. That is annual tax return. Why some are done, some of the tax return, they are done on a monthly basis. That one is a monthly tax return. So we look at different type of tax return, different type of tax return. Under the different type of tax return, we have personal income tax return. Personal income tax return. We have company income tax return. We have value added tax return. And another type of tax return that we have, petroleum profit tax return. So all these are the different type of tax return we have. Personal income tax return, company income tax return, value added tax return, petroleum profit tax return. We start by looking at personal income tax return. Personal income tax return, we can look at it in two angles. Personal income tax return filed by the employer on behalf of employees. While number two is the personal income tax return filed by self-employed person. That means the return filed by those who are not under employment service, who are not under employment, who are not under paid employment. So personal income tax return, we can divide it into two. Personal income tax return filed by the employer on behalf of employee. While personal income tax return filed by self-employed person. Who are the self-employed person? They are the sole proprietorship. Those people that are doing their own business. The professional. They are, those people that are having, they have their own, the celebrity, the musician, the businessmen, all those people that have their own job, that they are not working under employment, they are doing their own job, they file self-employed. Now, the personal income tax return filed by the employer on behalf of employee, that one is otherwise called payee. The personal income tax return filed by the employer on behalf of employee, that one is otherwise called payee. Pay as you earn. Payee. It is the return filed by the employer on behalf of employees. Pay as you earn. This payee, we can look at it in two ways, in two types. Annual payee and monthly payee. Payee, personal income tax return filed by the employer on behalf of employee, which is payee. We can look at it in two angles. Annual payee return. And what? Monthly what? Monthly payee return. So annual payee return, it is the return filed by the employer on behalf of employee after the end of the year. And this must be filed not later than 31st of January of the following year. Annual payee return, it is the return filed by the employer on behalf of employees. And this must be filed not later than 31st of January of the following year. What are the content of annual payee return? Completed Form A. Completed Form A is called income tax form for return and income, for return of income and claim for allowance and relief. That is number one content of annual payee return. Number two content of annual payee return is Form H1. Form H1 is called annual income declaration. Form H1 is called annual income declaration. This annual income declaration is part of content of annual payee return. Why number three content of annual payee return? Schedule of tax deduction from the employer. Schedule of tax deduction from the employer, which comprises of name of the employer, taxpayer identification number of the employer, name of the employee, taxpayer ID of the employee, total emolument of for each employee, consolidated relief, tax deduction, overall tax charge. All these are schedule of tax deduction. All these are schedule of tax deduction. Another content of annual payee return, evidence of payment of payee tax. Evidence of payment of payee tax every month. Evidence that the employer pay payee tax every month. Another content of annual payee return, evidence of payment of business premises. Business premises levy must be paid by company every year to State Internal Revenue Service, and they must pay it while annual payee return. For a new company, it is 10,000 naira. Why for existing company, it is 5,000 naira. Evidence of withholding tax deduction and remittance is part of content of annual payee return. Evidence of withholding tax deduction and remittance is part of content of annual payee return. Another content of annual payee return, evidence of development levy payment. Development levy payment is paid for each of the employee, and the law say 100 naira per employees. So if you have 10 employees as an employer, you have to pay 100 naira times 10, which is 1,000 naira. Development levy. This development levy is very small to me. One of the suggestions I make when they are doing the new tax law the Nigeria Tax Act 2025, which commenced this year, I said they should review the development levy. Maybe they can review it to 10,000 naira or 5,000, you understand? Because this 100 naira, they have been using it since 2001, no, 2010. Time value of money. What 100 naira can buy 15 years ago, 100 naira of today cannot buy it. So there is need for review for this development levy, which is 100 naira per employee. 100 naira is meaningless in this current situation. If you have 10 employer, 1,000 naira, what is the impact of 1,000 naira? Is that a tax? So all these are the content of annual payee return. However, failure to file annual payee return. If an employer fails to file annual payee return, the employer will pay penalties of how much? 500,000 naira. Penalty for failure to file annual payee return is 500,000 naira. It is going to pay by the employer. That means by the company. So these are annual payee return. Monthly payee return. It is the return filed by the employer on behalf of employee. But this one is done on a monthly basis. According to the law, when the employer deducts salary, deducts tax, personal income tax from the employee, that personal income tax deducted from his salary every month must be remitted within 10th of the following month. E.g., personal income tax deducted from employee salary in the month of April must be remitted not later than 10th of what? May. So by doing that, indirectly, you are filed monthly payee return. What monthly payee return require is by you for the company to be paying that monthly personal income tax that they deduct from the employee salaries. And failure to file monthly payee return will attract a penalty of what? 10% for every month in which the failure continue. Failure to file monthly payee return will attract a penalty of 10% every month in which the failure continue. We have looked at payee return filed by the employer. You know, we say personal income tax return is divided into how many? It's divided into two. Abi? First one, the return filed by the employer on behalf of employee, which is payee return. Second one is what?
Filed by self-employed.
The one filed by self-employed is called direct what? Assessment. The return filed by a self-employed, we call it direct assessment return. All this return is filed by self-employed. Who are the self-employed? The professional, lawyer, professional accountant that are doing it, that are not underpaid employment. All those traders, all those artisans, politician, farmer, welder, tailor, carpenter, bricklayer. They are the one that will file direct assessment return. And the law provided that this direct assessment return, they must file it not later than 31st of March of the following what? Of the following year. Direct assessment return must be filed not later than 31st of March of the following year. However, under the new tax law, the Nigeria Tax Act 2025, NTA 2025, that we are using under the new tax law, The new tax law said employee is also required to file direct assessment return. Apart from the return that the employer has filed on his behalf, on his or her behalf, employee now is also liable. They are liable to file direct assessment return. The NTA increased the scope of direct assessment to include employee. The idea for that, the reason for that is tax authority feel that everything is working well in the country. Everything is working well. Tax authority, they feel that everything is working well. They are now assuming that, as an employee, apart from your paid employment, that you are collecting salaries and wages, you will still have time to go and do side hustle that will be generating you income. So they now expect you, if you file direct assessment, you need to include your side hustle, your secondary source of income. But the question is, how many employees have secondary source of income? Does the country conducive for the employee to say he want to be doing business? Employee that will go to work from 7 o'clock in the morning, he will come back what time? He will come back around 8 p.m. or 9 p.m. or 7 p.m. What time does that employee have to do side hustle? Is it Saturday or Sunday you will expect him? Or what avenue does government create for an employee to be doing tax hustle, side hustle? Is the business environment friendly to the trader? Those who are even doing the business gone, they are even saying they want to close because they are not making profit. Talk less of somebody earning salary. You now expect him to go and be one every Saturday and Sunday to go and be looking for one business to do. At the end of the day, you should now be paying tax. Do you understand? So when they are talking of this direct assessment that it include the employee, some tax authority, they want to misinterpret the law, most especially the Lagos State Internal Revenue. They misinterpret the law. They are now saying it is employer that will now also file this direct assessment return for each of the employee. We have to write them. We say no, that is what not the law say. It is employee that will file the direct assessment by themselves, because employer cannot know the secondary income of the employee. As an employer, do you know where your employee is doing any other income, secondary income? No, it is the employee that will know. So direct assessment will be filed by the employee. Indirectly, Lagos State, they want to pass it on the employer that, okay, we have be filing direct assessment on behalf of your employee, apart from the one you have filed 31st of January. But people say no. That is what the law says. The law did not say that. The law said employees should file it direct. Rather than now putting additional burden on the employer. Can you imagine a company that have 200 staff? You expect him to be filing direct assessment for each of the staff. Additional costs. And they will now be asking staff question. Where do you have any secondary income apart from the salary we pay you? Are you the owner of your house? How much do you rent for? How much do you earn for your rent? That one is no need. It is the employee that will file it by themselves. And the penalty is strictly on the individual employee, individual trader, individual sole proprietorship, individual professional, not the company. So, but I'm happy they have readdressed this, because at a time around the 20th of March, beginning of March this year, FRS is now circulating letter to employer. They are now scaring the employer again, that they expect them to be filing return, direct assessment return for the employee, which the law did not state. Why are we misinterpreting the law, or in the name of collecting tax, making business unbearable to the people? So, what are the content of direct assessment return? That means the return filed by the self-employed persons. What are the contents? Duly completed self-assessment form. Income tax form is part of the content. And that your income tax form will consist of statement of full amount of income earned in the preceding year, particulars of income and relief, and allowance, declaration or attestation of the correctness and completeness of the return, evidence of payment of tax, evidence of development levy payment, why withholding tax credit note. All these are the content of what? Direct assessment return. And like we said, direct assessment return, what is the due date for filing direct assessment return? Direct assessment return must be filed not later than when?
31st of March.
Of the following year. Failure to file direct assessment return will attract a penalty of what? 50,000 naira for the self-employed. We attract a penalty of 50,000 naira for the self-employed. So this is personal income tax return. Please, let's take note of return. Tax return. They can ask a question on tax return. Another type of tax return, company income tax return. Company income tax return is a return filed by a company at the end of every year. And this return must be filed within 6 months after the end of the financial year of the company. This return, it is the return that the company will show the profit that they make, the turnover that they generate, the tax that they pay, the company income tax that they pay, the education tax that they pay. Like I said, this company income tax return must be filed not later than 6 months after the end of the financial year. However, for a new company must file company income tax return within 6 months after the end of the first accounting year end, or within 18 months from the date of commencement of what? Business. Do you understand this? What are the content of company income tax return? When a company wants to file company income tax return, one of the content is duly completed self-assessment form. Duly completed self-assessment form. Statement, audited financial statements. Number 2 content. Audited financial statement, which comprises of statement of financial position, statement of profit and loss accounts, statement of changes in equity, statement of cash flow. Statement, note of significant accounting policy. So these are the content of audited financial statement. Number 3, content of tax return, company income tax return. Tax computation for the relevant year of assessment, which include company income tax computation, tertiary education tax computation, police development levy tax. Another content of company income tax return, capital allowance computation. Of fixed assets is part of company income tax return. Evidence of tax paid is also part of company income tax return. Mostly now, this company income tax return, company file it using their tax pro max. Using their tax pro max, they file the company income tax return using their tax pro max. That is what they used to file company income tax return, their tax pro max. Failure to file company income tax return A company, if a company fail to file company income tax return, they will pay a penalty of 25,000 for the first month and 5,000 for each subsequent month of failure. However, when you file company income tax return and you do not pay company income tax, you can file return and you pay company income tax later. But if you late to pay the company income tax, that means you can file return in January and you pay company income tax in June. You must pay the company income tax not later than 30th of June if your accounting year end in 31st of December. So late payment of company income tax attract a penalties of what? 10% of the amount not paid plus interest at prevailing commercial rates. So late payment of company income tax, we attract a penalties of what? A penalties of 10% of the amount of tax not paid plus interest at prevailing commercial rate. So that is what we need to know on company income tax. Value added tax return. Value added tax. We know value added tax is a consumption tax imposed on value added in the purchase of goods and services. And this value added tax is borne by the final consumer. It is borne by the final consumer. Presently, the rate of value added tax is what? 7.5. And value added tax return must be filed not later than how many days? 21 days following the month of the transaction. Value added tax must be filed not later than 21 days of the month following the month of transaction. We file value added tax return every month, 21 days. Value added tax return of April must be filed not later than what? 21st of May. Failure to file value added tax return, there is a penalties. What are the content of value added tax return? If a company wants to file value added tax return, they have to provide evidence of payment of the value added tax. Is one of the contents. VAT return form 02. Completed VAT return form 02 is part of the content of value added tax return. Schedule of VAT collected showing the name, the taxpayer identification number, and the amount. Schedule of the VAT that the company collects. It shows the name of the company, the consumer that paid the VAT, the taxpayer identification number of the consumer, and the amount of VAT is part of the content. Total sales value for the month is part of the content. Total purchase value for the month is part of the content. Total value of good exempted is part of the content of VAT return. Why zero rated good is part of the content of VAT return. Value of good exempted and zero rated good. All these are the content of VAT return. The due date for filing VAT return. When we have some people, they call them direct VAT agents. Who are the direct VAT agents? Government ministry, bank, telecommunication company. All these people, if you render service for them, if you charge them VAT, the VAT you charge them, they will not pay it to you. They will go and they will deduct it from the invoice you send to them, and they will go and remit it to FRS direct. Those people, they are the direct VAT agent. Direct VAT agent must remit the VAT deducted within 14 days of the month following the month of the transaction. MTN is a direct VAT agent. Glo is a direct VAT agent. Dangote group of company is a direct VAT agent. If you render service to Dangote or you sell good to them, if you add VAT, they will not pay you the VAT. What they will do, they will go and pay the VAT direct and show you the evidence of payment. If you render service to any government ministry, the VAT you charge them, they will not pay you. They will go and pay the VAT direct. All these people, they are the direct VAT agents. Their own, the timeline for filing their own VAT return is 14 days of the month following the month of transaction. Failure to file VAT return. Failure to file VAT return will attract a penalty of 50,000 in the first month and 25,000 for every subsequent month in which the failure continues. Failure to file VAT return will attract a penalty of 50,000 in the first month and 25,000 for every subsequent month in which the failure continues. So, ladies and gentlemen, this is what we need to know on VAT return. However, failure to pay VAT will attract a penalty of 5% of the amount not paid plus interest at prevailing commercial rates. Another type of return that we have is petroleum profit tax return. This petroleum profit tax return is filed by upstream petroleum company. Upstream petroleum company. Shell, Chevron, Mobil, all those companies that deal with crude oil, they pay petroleum profit tax. They don't pay company income tax. And they file petroleum profit tax return. However, this petroleum profit tax return, we may not need to talk about it. It's for the advanced tax. So they will not ask us questions on petroleum profit tax return because petroleum profit tax is an advanced tax. It's one of the major things that they do in advanced tax. So these are the returns filed by upstream petroleum company. So this is what we need to know on tax return. Do we have any question? Hello? Do we have any question? Please, if you have any question, let us know. So in the absence of no question, that will take us to a question on double taxation relief so that we can close on time. Let's look at one question on double taxation relief. Okay, question 7. Somebody should help us read question 7.
Mrs. Idris Ifoma Busayo, a resident in Nigeria, has the following financial information. Can you move up, please? Year-end 30th September 2024, 30th September 2025, and 2026. We have basic salary, other allowances, trading income, fixed deposit interest, dividend received, net, assurance premium, payee paid. The following information are relevant for the relevant year ended. Net foreign income 30th September 2025 is $60 million. Foreign tax paid is $12 million. Capital allowance agreed in the 2025 tax year is 3,500 naira, 3,500,000 naira. Rental income was received on 2 tranches. 2,420,000 naira was received on 15th August 2024 and 1,430,000 naira was received on 15th December 2024. The rate of exchange is $100 to 1 naira. Required: compute the balance of tax payable by Mrs. Idris Ifeoma Busola for 2025 year of assessment. Thank you.
Okay. So we are asked to compute the tax paid for 2025 year of assessment. (2025 year of assessment). That is what we are asked to do. This lady, Mrs. Busola, has income. He has 2 income. Earned income and unearned income. His earned income. What are the earned income?
Basic salary.
Basic salary. I want to color the earned income in green. Oh, this one, I can't color this. So, earned income, basic salary. Other allowance is part of earned income.
Yes.
Trading income is part of earned income. Fixed deposit is on earned income. What about dividend received?
Earned income.
Unearned.
On
Unearned.
earned income. On earned income. Apart from that, he also have a foreign what? Income.
Foreign income.
It's foreign income. He has a foreign income. He has a foreign income. So the foreign income is given. So earned income, which is employment income, that one is assessed to tax on what basis?
Actual
Actually,
year basis.
Actual year basis. And the year of assessment we have in this question is which year of assessment?
2024,
2025. So the actual year basis for 2025 will run from when?
from 2025.
From
2025
January 2025 to when?
to December.
Remember,
To December 2025. So looking at the table, which income are we going to take as the salary if we want to follow actual year basis?
3.1
million.
3.1. Look at the date that they put on top. Year ended. 3.1 ending when?
September.
September. That means January to September is included in that 3.1, Abi?
Yes.
Why October, November, December, where can I take it?
2026.
2026. That means I'm going to prorate that salary.
Yeah.
Do you understand? I want to look at the Excel template of this question so that we can look at the Excel. Let's use the Excel to solve it. I have the basic salary. That basic salary, I need actual year basis of 2025. I need actual year basis of 2025, Abi? 2025. That is the actual year basis I need for the basic salary. I need the one of January to December 2025. If you look at the question, 3.1 consists of January to September. Why 4.4? That one consists of October to December, Abi? So, for you to get the salary, 9/12 times 3.1 plus 3/12 times what?
Sir, we are not seeing the question.
4.4. Okay, let me share the question. I'm sharing the Excel now. Let me share the question. So, can you see the question? This 3.1 million,
Yes.
9 months out of 2025 is included because it's for 1 year, year ended. Why this 4.4 million too is for 1 year, year ended. But how many months of 2025 is included?
3.
3.
Mm-hmm.
So 9/12 times 3.1 plus 3/12 times 4.4. So what are you going to get? You are going to
3
get
million 315.
3 million. 3 million what?
I don't understand, though. I don't understand, sir. Not
3
clear,
million
sir.
315.
I don't understand too.
This 3.1 million, how many months of 2025 is included?
It's 9 months.
9 months.
9 months.
So 3 more months.
It will be taken out of 2026.
Another 3 months, which is October, November, December, is included where?
In the next one,
2026.
2026, sir.
4.4.
Mm-hmm.
So how do we get?
The operation
So
is not 3/9.
3 over, no. You know, see,
9/12.
year end. All this income, they are for how many months?
Okay,
12
12 months.
months.
12
12,
months.
12 months. But you need in 2025 year of assessment, you need salary of January to December 2025 because 2025 is assessed on the actual year basis. Actual year basis. January to December 2025. How do we get salary for January to December 2025? 9/12
Over 12
times 3.1.
times 21.
That will give us how much?
23,250.
325,000.
Why 3/12 times 4.4?
14,000,000. 1
1,100,000.
million. Hmm? How divided by
1.1.
So
1 point.
addition of the two. Addition of the two. What is the addition of the two?
3, 4, 5. Okay, 425. That's correct.
3,425. Do you understand?
Yes, sir.
Sorry, sir,
Other
please. I don't know.
allowance.
Excuse me, sir.
Okay.
Yes, please. This the 4/12 times this 4 million. I don't know. It's giving me a different answer. I don't know how.
It's not 4/12. Oh, we use. Oh. What do we
Okay,
use?
better.
3/12, sir.
3/12.
Okay.
You know,
Okay.
salary, basic salary under personal income tax is assessed to tax on actual what?
Year basis.
actual year basis. In this question, we are asked to compute the tax liability for 2020 what year of assessment?
5 year of assessment, sir.
2025. So we need salary of January to what?
December 2025, sir.
2025. And look at the question that they gave us. They say year end. The year end that they gave us is ending 30th September, 30th September. Assuming the year end now is ending 31st of December, we don't need to prorate. Abi?
Yes, sir. Correct,
Yes.
sir.
But the examiner deliberately give us year end that end 30th September, 30th September. That means 9 months out of 2025 is included in this 3.1.
Mm-hmm.
To make it 12 months, the balance of the 3 months is where?
2026.
2026. Because as this 2025 ends, this 2026 started immediately. That means this 2026 started 1st of October 2025. Do you agree with me?
Yes, sir.
Yes, sir.
Other allowance too is an employment income. Other allowance, like housing allowance, transport allowance, is an employment income. We do the same thing. That one too is assessed to tax on actual year basis. So what are we going to do? 9 over 12 times 420 plus 3 over 12 times 660. That will give us how much? Oh yeah.
9 divided by 12 times 420 315,000.
Okay, the second one.
$165,000.
Add the two together.
480.
480. You can see 480. Because this question has double taxation relief. Your earned income, divide it into two. Nigeria income and what?
Foreign
income.
Foreign income. Because this has double taxation relief. We are still on Nigeria income. Now, foreign income in the question. Which one? How much is the foreign income in the question?
$12,000.
That's foreign tax.
Foreign income net is
Foreign
60
income is $60 million.
60,000 million. Away.
$60 million.
$60 million.
That is the net. Abi?
Yes, sir.
To get the gross income,
Divide it by how many percent did we
no. This is the net. And they say they have paid tax or foreign tax amount they paid.
$12,000.
$12,000.
So for us to get the gross foreign income, what do we do?
Add back.
Minus.
You add back.
We add it back. We add the tax back. You know, net, they get net after they deduct tax. Abi?
Yes, sir.
Yep.
When you add the tax back, how much is it giving you?
$72,000.
12,000.
720. 72.
$720,000. Abi?
Yes,
This $720,000 dollar.
70, okay, I'll be 72.
No, Mr. Please hold on. 60 plus
$72,000.
Exactly.
72,000.
$72 million. Sorry.
$72
$72 million.
Million.
Exactly.
We convert it to naira.
By
Okay,
100
by
naira,
dividing
that's
by
72
100.
billion.
Okay.
720,000.
Yeah,
72
720.
billion, no? Abi? Oh, 720 by 100 naira. Okay.
Do you understand?
Yes,
We
sir.
secure.
We convert it to Naira equivalent. In this question, what is the Naira equivalent of $72 million?
$100.
Mhm.
$100 to $1.
So 720.
Mr.
You can see.
Idris.
Yes?
Well, this is not 2025 rates now.
They gave us
That
straight
is
in the
what is given to
question.
us in the question.
Mm.
Eh? That is what is given to us in the question, my brother. Don't say,
Mr. If
is
you
what
have
is given to you in the question you will use now. Ah.
Okay, sir.
So if you convert it, then it should be 7,200,000,000.
Ah.
You are
we double
dividing it.
Hey.
It's $1 to $100.
Ah.
Oh, okay.
So you're dividing the 72 million by
I'm not
100.
okay.
Do you
just
understand
remove
how we get the 720 naira? 72 million divided by 100. We get the 720. Do you understand? In the
Mm.
exam, some students, they will think it's every time dollar normally have value than naira. They will go and times it by 100 again.
in reality.
But
Yeah,
are we not
correct.
supposed to convert it to Naira? That's the question now. Are we not supposed to convert to
Eh,
Naira?
have we not
But the
converted to
thing is,
naira?
Naira is
It
of a
says
higher value.
that $100 is equal to one
It's
naira
$1.
in the
Yes,
question.
as if Naira has better value than
Look
dollar.
at the rate of exchange. Look at the rate of exchange.
Oh, okay.
Do you understand?
Yes, sir.
So foreign income is part of earned income. So we have put the foreign income gross. Mind you, you normally use foreign income gross. You know how we get gross. Sometimes they will give you the gross foreign income, but most time, they will not give you the gross foreign income. They will give you the net foreign income. They will not give you the tax that. So now on earned income, in this table, which one is on earned income? No, we are still on earned income. We have another earned income called trading income. Trading what? Income. Trading income means income coming from trade, which is adjusted
Mm.
profit. Trading income is assessed to tax on what basis? Under personal income tax.
Preceding year basis.
Preceding year basis. So, ladies and gentlemen, in this table, which trading income am I going to take?
2024.
2024. 2024.
2024, which is 16 million. 2024, which is 16 million. Do you understand? Trading income means adjusted profit. In adjusted profit, what normally affects adjusted profit? What normally affects adjusted profit? When we get adjusted profit, what do you normally less from adjusted profit?
You add back the salary expenses.
No. Adjusted
dividend,
profits.
Capital
This
Capital
trading
allowance.
allowance.
income is the adjusted
Capital
profit.
allowance.
What do you normally less from adjusted profit?
Capital allowance.
capital allowance,
Do you have capital allowance in this question
Yes.
Yes.
for
Yes.
2025? How much?
3 million
3.5.
3.5 million.
5 million.
So you less it. 3.5 million. You less. From that 16 million, you less the capital allowance. The balance is going to give you 12.5. Do you understand? Trading income means adjusted profit. If you have adjusted profit in a question, you must remove what from adjusted profit?
Capital.
Capital allowance. Do you understand? Now, we are finished with earned income. We cannot go to unearned income. The unearned income we have in this question, who can tell me the two unearned income we have?
Dividend.
That should
Dividend
be
received.
dividend received and fixed deposit interest.
Fixed deposit
Yeah.
interest. So unearned income is assessed to tax on what basis? Preceding year
Year
basis.
Receipt.
Unearned income is assessed to tax on preceding year basis. So which unearned income am I going to take for interest?
2024.
350.
350,000. Abi?
Yes.
350.
Are we not
We
prorating it?
assume that interest is gross. What are we doing proration for? Which one is proration now?
I'm just asking.
Okay, when you are using actual year basis, that is when you can say proration. But when you are using preceding year basis, it can follow based on the accounting year end. Do you understand?
Yes, sir.
So, dividend, they now write net. Are we going to take the net or we need to do something first?
What's up?
I just will change it to gross.
We have to gross it.
Yeah.
We have to do what?
Gross it.
Gross it. How do we gross?
100 over 90 times 900,000.
1,000. 100 over 90 times 900,000. That will give us how much?
That will give us 1 million.
1 million. Do you know how we gross that? We have done, so 1 million is the dividend. You write dividend gross, 100 over 90 times 900, 1 million. In the question again, apart from the table, we have unearned income again. Oh. We have another unearned income, but that one is not stated in the table. It's stated where? Which unearned income we have in the additional information?
Rental.
Rental income.
Rental income. Rental income was received in two tranches.
Yeah.
240 million, 15th of August 2024. 1,420,000 was received on 15 December 2024. So what are we going to do, my people?
Add both.
Add both.
You know, rental income is assessed to tax on what basis?
Preceding.
Preceding year basis.
Preceding year basis. In this question, this person, what is the accounting year end?
2024.
What is the accounting year end of
September.
this person?
2020.
30th September.
Yeah.
So I need rental income that end when?
September.
2024.
Okay.
December
September.
2024.
30th September 2020 what?
4.
4. So before you say you had, look at it very well. So which one are we going to? Are we going to add or we have to take one?
Take one.
240.
We take 2,420,000. We cannot take 1,420,000. Why? Because that one is not part of the accounting year end. This one is part of 2026 year end.
Yeah.
It is after September. Do
So
you
it's
understand?
2026 or 2025.
2025 year end start from 1st of October 2024 to 30th September 2025. This one, oh, we are going to take it.
Yes.
Yeah,
Yes.
it's 2024, not 2025.
Exactly.
Yeah, we have to take it. We have to take it. It's 2024, not 2025. That means we have to take it.
Yeah.
We have to take it. But, ladies and gentlemen, it's me that said this question. You know what? Point of correction is 2025. I want to write here.
Yeah.
It's
Okay.
not easy to set a question. When you are solving it, that is when you will see errors. Because in my solution, I did not use 1,430,000.
Okay.
So it is 2025 I want to write, not 2024. You know, this December 2015, 2025 will be part of that 2026 year end. Because
Yeah.
2026 year end starts in 1st of October 2025.
Yeah.
So thank you for noting some of the questions. If I'm solving them, that is not easy to write a textbook, to set a question. So you will see that. So I'm going to take just 1 year.
Okay.
2,040,000.
Mm-hmm.
So your on earned income, the total is 3,770,000. Why the total earned income is 17,125,000. Earned income plus on earned income, what do we get? What
Total
earned
income.
income plus
Total
on earned
income.
income will give us what?
Total income.
Total income. So in this question, how much is our total income? 20,895,000. From our total income, we should less what?
Dividend.
Frank
Dividend.
investment income,
Dividend.
which is dividend.
Yeah.
1
1
million.
million. Yeah.
We get net total what?
Income.
19,895,000. From net total income, we now less tax
Taxes.
exempt.
Insurance.
What are the tax exempt in this question?
Insurance.
Who can
Assurance
show me the
premium. Assurance
assurance
premium.
premium? So which one are we going to take?
Actual.
Which year of assessment are we doing?
It's preceding.
2025.
It's preceding.
2025. No.
Yeah.
We take the one of 2025.
Yeah, actual now. Yeah.
Yes. That 285 is what we are going to take.
Yes, sir.
2025.
Sorry, I don't have light.
So if it's actual, then we
I
have
go
to
around, I don't have light.
We don't
Eh?
prorate tax exempt. We don't prorate tax exempt. What tax exempt was paid in 2025 is what we take. We don't prorate tax exempt. Please take note of that.
Okay.
Yeah.
Unlike income that we prorate. Let's go ahead. In this question, do we have any tax exempt again?
Oh.
No tax exempt. So the only tax exempt we have. When you less tax exempt from the net total income, you will get gross income. How much is your gross income? 19,610,000. From gross income, you now less consolidated what?
Tax relief.
Relief allowance, which is the tax relief. In this question, I'm going to use 200,000 plus 20% of what? Gross income.
Sir, please, this CRA, I'm still like trying to figure it out well. Maybe you should throw more light on it and how it's gotten.
CRA. How do we get CRA? Who can tell me? Higher of
Higher of
1% of what?
1% of gross income
gross
or
income
Or
200,000, whichever is
200,000
higher.
of gross
100,000.
income.
Whatever is higher, you take plus 20% of what?
Gross income.
Gross income.
Gross income. In this question, 1% of gross income, 1% of this 19,610,000 is what? 1%.
1%.
196.
196
196,100.
million 110, Abi?
Yeah.
Is it higher than 200,000?
Yeah.
No, it's
No.
not higher.
Yeah.
That's why I took 200.
That is why we take 200.
Mm.
Even when you are good with personal income tax, any gross income that is more than 20 million, that is when the 1% will be higher than what?
It's
Will be higher
200,000.
than yeah.
200,000.
Yeah.
If the gross income is more than 20 million, definitely the 1% will be higher than 200,000. Do you agree with me?
Yes.
So without seeing the question, you should know whether to use 1% or 200,000. If I'm giving 21 million, am I going to use 1% or 200,000?
1%.
You are using 1%.
Yes. 1%.
1%.
1%.
Because
Yes.
1% of 21 million is 200 and what?
10,000.
10,000.
10,000.
Higher than 200,000.
So for the CRA, you just use 21% and go.
So 200,000 plus 20% of the gross income. 20% of 19,610,000. That is 4,122,000. You minus it from the gross income. Your chargeable income is what? 16,773,000. From there, you will also go further. You can now compute tax. First 300,000 at 11%, Abi.
Yeah.
7%.
Second
7%.
300,000
7. Yeah.
at 11%.
Yes.
First one is 7%.
Yes.
Second one is 11, Abi.
Yes, sir.
Third, next one, 500,000 at what percentage?
15%.
That will give us 75,000, Abi.
Yeah.
Another 500,000 at what percentage?
19%.
That will give us 95,000.
5,000. Yeah.
Another 500, 1.2 million at what percentage?
21%.
That will give us what?
336,000 naira.
When you reach that 1.2 million, everything 300,000 in 2 times, 500,000 in 2 times, plus 1.2 million. Everything will give you what?
1.2.
Mr. Idris.
3.2.
3.2. That 3.2, you will now minus it from what?
The total. The
From
chargeable income.
chargeable
Idris.
income. Yes.
Please, when we get to this, the 21%, it's not supposed to be 1.6 million, sir.
It should be
Which one?
1.6, not 1.2.
With
The fifth one after the second
Is it
500,000.
1.6 million? Not
1.6.
sorry.
Yeah.
No, 1.2.
This one is
1.6.
1.5500,000. This one is 1.6, Abi, not
Yes.
1.2.
Yeah.
Yeah.
Everything together is 3.2. Abi,
Yeah. Yes.
3.2. 300 plus 300 plus 500 plus 500, Abi,
Yes.
plus 1.6. It will give you 3.2, Abi.
Yes.
That 3.2, you minus it from 16 million
Chargeable income.
773, Abi.
Yes, sir.
So what are we going to get?
13,573,000.
13,573,000.
Yes.
That one will be charged at what percentage?
24%.
24%. So you can find 24% of 13,573,000.
3,257,520.
Do you understand?
No, sir, sorry, please. This
Eh?
particular tax, this tax, calculation of this tax liability can be a bit confusing, especially for me. I'm still trying to figure it out. Please, can you just like explain at what point do we stop?
First of all, personal income tax table. Do you know the personal income tax table? Personal income tax table starts from first 300,000 at 7%. You have to know it.
Yes, sir. Yes,
Second
I know.
300,000 at 11%. Next 500,000 at what? 15%.
15,
Next 500,000 at
19,
19%. Next 1.6 at what percentage?
21.
21%. Anything above 3.2, after you have removed 300 twice, 500 twice, you remove 1.6. Anything above that 3.2 million is going to be taxed at what percentage?
24.
24. Any remainder income after you have removed 300 twice, 500 twice, 1.6 once, any remainder is going to be taxed at what percentage?
24.
24. In this question, the remainder income is 13,573,000 and is going to be taxed at what percentage?
24.
24%.
Okay, so what are for cases that it didn't get up to 24%? You just stop at the percentage that it gets to.
Okay, let me give you assignment now. You will do it now. Assuming my chargeable income is 2.5. 2.5. So how do you do it? My chargeable income is 2.5. How do you do it?
Yeah, that's why I'm asking you because that one is very confusing for me.
Oh, try it now. Try 2.5. Oh yeah, you will start from what?
First 300, next
300.
300,
Let her
next
try it.
500,
First
next
300.
500.
Let
First
us
300.
try.
First 300, you remove it from 2.5. You also remove another 300 from 2.5. You have
2.5.
removed
Okay.
300 twice. That
Yeah.
300 you remove twice. That is 600,000. What will be the
Yes.
balance?
Sorry, I'm coming. Remove 300, 300, and then the two 500, right?
Yes. From 2.5, you have removed 200 twice. The balance is what?
90. I don't make it.
1.9.
1.9. Sorry, 1.9.
You remove another 500.
That's 1.4.
You remove another 500.
That's 900.
So that 900 is going to be taxed at what rate?
At 21.
21. Because that
Okay.
900 fall under what? It fall
The
under
1.6.
1.6.
6.
Do you understand?
Yeah.
It fall under
Okay. I get it now.
1.6.
Okay.
So that is how. So our total personal income tax in this question is 3,817,520. You know, this question is a double taxation relief question. We now go and compute double taxation relief rates How do we compute double taxation relief rate under personal income tax? We first of all get Nigeria rates, and we also get Commonwealth rate. The Nigeria rate, if you want to get Nigeria rates, our tax we compute that our personal income tax 3,817,520 all over total income of Nigeria. The total income of Nigeria is 19 million 895 17,520 divided by this. Commonwealth rate, if you want to get the Commonwealth rate, if you want to get it, foreign tax paid all over gross foreign income. How much is the foreign tax that was paid in the question?
12 million.
$12 million. What is the gross income?
72 million.
72.
12 over 72. Well, that will give us what?
Okay. What's that?
12 over 72. That will give us what? Me, when I want to get the foreign tax rate, I convert it to Naira. I don't use dollar. But you can use dollar to get the foreign, the Commonwealth rate too. So 12 over 72, it will give you 16.67%. Do you understand? 16.67%. That's 16.67%. Out of the two, Nigeria rate, Commonwealth rate, which one are you going to take as double taxation relief rate? Which one are you going to take? We take the lower. Which one is lower between the two?
16.67.
That is what we use as double taxation relief rate. In question, I've solved double taxation in class. Oh, I've solved it in your class. Oh, we need to start revising our notes. Start solving the question on our own too. The only way we can know it is by solving the question on our own. So I'm going to take 16 point what? 67%. So looking at this question, are we less double tax relief out of the gross income, out of this total income, which income want to suffer double tax? Among the all the total income, which income do you think you want to pay tax twice? How much is the foreign income?
720.
72 million.
720.
720.
Naira. So 16.6% times 720. It will give you 120. That 120 is the tax relief that you are going to relieve. Your net tax paid, the net tax you will pay will be 3,697,520. 3,697,520. You will now go again on any income. Some of the unearned income, they will have deduct tax at source from them. Which of the unearned income we attract withholding tax at source that we can use the withholding tax to offset our tax? Which one?
Dividend.
No, dividend
Frank.
we can't use its own. We have used it as frank. We have removed dividend. Rent.
Okay, yeah.
Attract
Rent,
withholding
yes,
tax.
rent.
Interest too. Attract what?
Withholding tax.
What is the withholding tax rate on rent?
10%.
10%. 10% of 2.4 million 420.
242,000.
242,000.
So interest income 10% of 350.
35,000.
We come and we remove that withholding tax to reduce our personal income tax. You can see less withholding tax. 242. The net personal income tax that this lady will pay is what? 3,420,000 after you have removed withholding tax, Abi?
Yeah.
The question is one kind question. If you go to the table above, they say payee paid. Payee means personal income tax, Abi?
Yeah.
We have
Yeah.
already paid some personal income tax before. How much have we paid?
755,000.
55,000. 755,000. That is from 2025. We remove it to know the net balance we are going to pay. So if we remove it, 755,000, what will be the balance of tax payable?
2.665.
520. Do you understand? So that is the balance. 2,665,20. So that is what we are asked to do in this question. Double taxation relief under personal income tax. You compute Nigeria rate. If you want to get the double taxation relief rate, you also compute Commonwealth rate. Abi? How do we get Nigeria rate?
Yeah.
The tax you compute, the personal income tax you compute before you deduct anything, all over total income.
Yeah.
If you want to get Commonwealth rate, foreign tax paid, all over what?
Total income.
All
Foreign
over
income.
gross foreign
Income.
income. When you get Nigeria tax rate and you get Commonwealth rate, you compare which one is what?
The lower.
Lower. Is the lower one that you take as double tax relief. If you want to get the double tax relief amount, that percentage, you times it by the income that want to suffer what?
Double taxation.
Double taxation.
Double taxation. So please, let's pay attention to this. Last, when we are solving double taxation, we solve another one on personal income tax, on company income tax in the class, Abi? So this is where we are going to stop today. So if you still have time, I may look at national tax policy and I solve question on custom duties. Custom duties. There is a particular question, there is a particular topic called custom duties. I just need to solve question on it. It's very
So
simple.
what of hospital? I mean insurance, sorry. The specialized
Insurance.
business. Question on insurance. Yes.
Insurance is very hard. Insurance is very hard. Though maybe I may solve question, but it's very hard. I don't think they may set insurance. Though they have included it in your syllabus, but it's very. I will solve question on insurance, but insurance is very hard. It's not hard. It's not hard. Sorry, it's not hard. I will solve question.
Mr. Idris.
Yes.
So when we are doing double taxation, we will always be, are we going to always be giving the tax paid in the other country?
Yes.
The value.
Yes. If they did not give you the value, they may give you the percentage of the tax paid. They may say they pay 20% of the gross income in other country as tax paid.
So
do you
in
understand?
that case, we'll be giving the gross income, not the net.
Not the net.
Then last question, sir. That assignment question you gave us yesterday, can you please run through the solution before we go?
I need to do something now. Sorry.
All right.
You understand? So by God's grace,
Please,
we are
oh,
still going
we
to
thought
add
it
one more
about
lecture.
a way.
We are still going to have one more lecture. We
All
add
right,
one
sir.
more lecture. Thank you. Yeah,
Thank you very much, sir.
yeah, you are welcome. Madam, you want to ask a question? Alaja, I think you want to ask a
Yes,
question.
I was trying to request that you drop this material so that we can go through
Yeah, the
because we are
updated
not
one.
copying. Yeah. Yes, this
Okay,
Yes,
one
I
that
and
will
we
Mr.
I
all
will
want
Wakil, the
because yesterday
material for
and
the
today.
last
Yeah.
topic, so the
I
the
will
second
drop it.
topic we do today. Thank you very much, sir.
Okay, I will drop it.
Thank you so much.
Okay.